Hello, hello, and welcome to Losers Become Winners with CVX exiting at 109% with a move to the winner's circle. That takes the Tigers now to 9 points. The Alpha's 12. Here we go. There is our exit right here at the top of this candle. Now I'm going to say, wait a minute, how did we get the top of the candle? Well, what happened was I did an error. I came in at 8:30 this morning and saw 130%. I said, that's good. I'll go ahead and put my stop now, save myself a little time on the afternoon. And the result was I got stopped out anyhow at 9:06. But I got stopped out at the top of the candle, which is where I was going to have it anyway in case there's a reversal tomorrow. So the result is that we picked up $605 profit on two contracts, coming out to $12.10. And $2 in fees with 1208 as the net for the trade, paying back $9.96 on the owed, coming out to the winner's circle, net of $212. That is all the losses returned back to from Chevron, and most importantly, one less loss leader on the list. So now the Tigers' loss leaders is 16, right there. We are 16 loss leaders for the Tigers. So that takes us now to the next position, which is going to be Edison. And Edison has been struggling with a nice up and down, and today the market had a major crash down, and the result is Edison got pulled down with it, got held on steady right here at the support of the black price line. And we're going to be looking to see if we can get a recoup on that. If not, we are at 59%. So somewhere in here, we might still get out with a profit for this trade and get this rock of 1030 down to a pebble. It is running at 410 right here at this marker. That said, let's move on to our third position, which is XLF. And XLF is running here. Right there, nice big drop here, and it is a put, which is real nice in our direction. The price channel did not follow it through, but I expect in the next couple of days it should be starting to drop. The result is also too, if we can get another 59, if we can get 59% here off XLF, we can get our ROI 100, and the same thing for the Edison needs 41 to get their ROI 100 also to get out. Remember, we are in Tigers. Tigers is price channel. Okay, going on now to Verizon at 32%, and they're at 32% is our price channel. As right here, still up here, 32%, looking for an additional drop of 68. And get the ROI 100, or just starts dropping down following it through. That said, now that takes us to XLE, which just joined us today, and XLE is here, and there it is. I just saw that. I saw that note, and I don't know how I got it. Oh well, but I saw no note there showing the lost leaders. So we have some old notes to compare to the new lost leaders positions. Anyway, XLE is a 7%, and it is a put, and it's also moving in the nice down direction. I do need to bring attention to AEP. Now AEP is going to exit under a special rule, and the special rule is this. And it's called the 10x owed rule. What that means is that when an owed is, or let me reframe it in this form. When the profit, the current profit, is 10 times bigger than the owed, you will then do and take 10x take profit rule. And why? Because you already got your paid back on the owed, and our objective is to reduce the lost leaders list. Sure, we're here to make profit, but at the same time, the lost leaders is what's more important. Why? Because that's owed money that we want back in our trading coffers. So the reduction of the list is priority. So when we get into heavy profit, now remember, it's 10 times. So you're not going to see that exit very often. but if it does happen, we are going to go for it. All right, so that's just the explanation of AEP. That now takes us over. On the new format here for the recording, we're going to review the losers at the end of the recording. So we'll just keep the momentum going on the positives, and then come back to the losers at the end. With that said, let's go over now to the alphas. And here in the alphas, our leader is T for AT&T. And it's going down nicely. Now we are in the 30-day moving average, which is the alphas. So we are looking at that possibility of, now we have established already, we see no warning track. So we have an established out already here from the high that closed above the 30-day back here on October 22nd. Now we're waiting for price to come back up this way and test the 30 MAA barrier, or if it closes above it, we get out. We are holding 62%, so this has a good chance of getting as a profit, and therefore break the rock down into a smaller rock down to pebbles. Pebbles become profit. Profit does payback. That takes us to TJX, and TJX is here for our position. Another, again, the puts really ruled the day. This is why you have to have a mixed bag of trades, and of course preferably be on the right side of the trade tracks. So our puts are doing nicely, and then the calls also do well in downs, because it could be if we have something that's an inverse, something that a value goes up when something else goes down, that's called an inverse. That happens too, and then so those things happen. Okay, so that is the conclusion of the winners and winners. Let's go on, and for those who want to stick around, we're going to go on now to review the losers, and we'll start off with Bank of America right here in the alphas. The stop was set here yesterday. There's the close, and we got stopped out here at the opening. I moved the close line down here to show where our actual money was lost. We were lost here at the opening, and we lost $99 with 5 contracts, $4.95 for the total loss, $7 in fees, $502 for a new loss for the trade, and adding to the $21.22 for a new carry of $26.24 for Bank of America. Going on to RTX, Raytheon. Raytheon had a major crash. Again, it got stopped out here at the top of the red candle. That's what red candles are. They open on the top and close on the bottom. And Raytheon took a hit of $3.96 with 1 contract with $2 in fee, $3.98, $4.98 was the carry, with a new O now of $8.96. Now we'll switch over to the Tigers losers. And the Tigers losers, we had Pepsi. Pepsi came in. Pepsi was a call. And because of the market crash, look at that crash right on down. It went right through our price channel right here at 135.14. There it is. And we got out with a 292 loss on 2 contracts. It was a 584 for the trade loss with $2 in fees. Should really be 3, but we balance it out. 586, 1206 for the carried loss with a new O of 1792. Now that takes us to DIA. Here at DIA, it got stopped out here. It's price channel right in here, and the stopped up was here, not there. This is what happens when we have these gaps. There's no way to protect against them. So we got stopped out at 705 right here at the opening for 1 contract with $2 in fees, 707 for the loss of the trade, 367 carry with now a new O of 1074. And our last loss leader, our loss was Walgreen. It again, price channel was here at 35.27, 165 for contract, 660. That should be about $7 in fees, 662 for the loss, 1005 for the ad with a new O now of 1667. And with that, I thank you very much for checking it out and celebrating the CVX moved to the winner's circle with 109%, 55 days. Tigers 16 lost leaders to go, and a score of 9 over the alphas. And with that, I tell you, I bid my goodbyes.